Let's get Mayuresh Joshi, fund manager at Angel, in on this conversation. Mayuresh, I'm sorry to thrust the numbers of Kotak Mahindra Bank at you, but a quick reaction on what you're making of the numbers. PAT coming slightly above expectation, NIMs pretty much in line with the last quarter, so slightly below expectation. What's your call on these numbers?
Clearly, I think Kotak has been a consistent performer, and the numbers are probably testimony to that entire thesis. So clearly, I think NIMs more or less in line with what the expectations were. Profits a little bit on the downside with what we were probably expecting, but clearly, I think it's not a huge miss in terms of absolute numbers. And again, I think if we just back test all this data through, our take is that the credit growth should be in excess of 20-21% for the bank. So I think stable set of numbers coming through for the bank, and the price is probably getting reflected in the right manner for the same.
This integration with ING Vysya, Mayuresh, has it pretty much been penciled in what the expectations are in terms of what it means for the NPA book, what it means for margins, because they are two different kind of players which came together? What is the sense that you got?
No, clearly, I think if you read at the previous transcripts that the management has come out with, they are seeing compressions probably happening in terms of how the NIMs will pan out. And again, I think these numbers would include ING numbers as well. So the network integration costs, the compression in margins, the asset quality, I think those issues might play out on the balance sheet, but I think Kotak is probably well equipped probably to take care of all these issues and ensure that the synergies probably start coming through in the second half of the coming fiscal. So clearly, I think the valuation premium that the Kotak as a bank probably derives through its various businesses, apart from the banking business also, I think are quite supportive. So I think though they are trading at premium valuations, our own take is that these valuations probably justify in terms of how their core performance has been over the past few quarters.
Net interest margin has come slightly below. If you look at a year-on-year perspective, is it largely because of the integration aspect, or what do you make of it?
Oh yes, I think that will be a large part of it because of the integration issues. And again, I think the management did mention, if I recollect correctly, that there would be some amount of pressure onto the margins from a near-term perspective. But clearly, I think once these synergies start playing out, and that's again the entire thesis that the markets is working out with Mini, that once they start playing out meaningfully over the next few quarters, you will see margins normalizing and in fact expanding if we probably are seeing credit growth return over the next few quarters for the entire industry as well.
Okay, I'm going to pull out the Kotak stock, Mayuresh. If you look at it from a one-year perspective, it is in September, it started moving up. It touched a peak of about, if I'm not mistaken, 727 before it kind of came back down. What is your call on the price specifically, because it has been an outperformer within the banking space?
So clearly, I think there are no issues related to these three banks on the private space, whether it's Kotak, IndusInd or HDFC Bank. Stable numbers always expected from them, and they normally deliver on all counts, whether that is asset quality, whether that's credit growth, whether that's capital adequacy. So I think they're well equipped to probably take care of the credit risk shocks that the economy probably witnessed over the past few quarters. And if only we expect that the worst is probably over the next few quarters, you see credit growth resuming back for the industry as a whole, I think their operating leverage benefits will be far greater. Having said that, probably I think the valuations probably a tad bit higher compared to the other peers, but clearly I think, as I mentioned earlier, the valuation premium probably stays because of their core performance and the stability in earnings that they probably project.
Right, let me go across to my colleague Shraddha, who has a more detailed draft of the numbers and the fine print over there. Shraddha, what's the picture emerging?
Many numbers absolutely in line with what we were expecting. So there are no negative surprises here, even on the asset quality front. So NII number that is coming at 1766 crores versus a number of 1751 that we were working with. Net profit also has come in at about 635 crores versus a number of 625 that we were working with. Of course, I'm talking about standalone numbers. Net interest margin also, the standalone NIM has come in at 4.3%. This is versus 4.3 that we just saw in Q2. So the bank has actually been able to maintain their margins on a sequential basis. Non-interest income also done well. Other income has come in at 722 crores versus 494 crores. If we look at the credit growth, that seems slightly mutish on the disappointing side, I'm going to be comparing numbers on a Q-on-Q basis. So credit growth has come in at just about 1% on a sequential basis, of course, versus 7.8% sequential growth that we actually saw in Q2. However, if you look at the asset quality numbers, we are expecting some credit costs to rise sequentially. We are expecting a higher provisioning to come in from the ING Vesya book. However, if you look at the provisioning number, 235 crores versus 176 crores, so there has been some increase there. But if you look at the NPA numbers, gross NPA is coming at 2.3% versus 2.35, and net NPA at 0.96 versus 1.05. So some improvement coming in there. Even if you look at the absolute gross and net NPA numbers, they would be absolutely flattish on a sequential basis. So overall, broadly in-line numbers and no negative surprises for now.
Right, Mayuresh, I'm going to pull out the stock price of Kotak in relation to HDFC Bank and IndusInd Bank, which are the three outperformers in the BankX, BSE BankX. In a 12-month horizon, we've got Kotak also slipping into the red. So obviously the valuation gap has been something that the markets have also looked out for. IndusInd still remains up about 10% over the year, and HDFC Bank up about 3.5%. Within the lot of banks, especially given the value correction that we've seen in most stocks, what's your top pick, Mayuresh, in the banking space, and how does Kotak fit into that?
No, clearly, as I mentioned, I think the valuation is a little bit too on the higher side as per our expectations for the bank, and those premium justification stays for Kotak. Having said that, probably I think we probably are liking a clutch of these private sector banks now to the sharp correction that we've seen, and the market fear is probably related to the corporate stroke SME lending book that a few of these large private sector banks have on their books. Having said that, probably I think the conscious efforts of these larger private sector banks is to drive the retail expansion, and that is being seen evidently in their numbers in how their advances growth has been specifically to the retail side. So whether that's ICICI Bank, Axis Bank, Yes Bank, I think they're making conscious efforts to already de-risk their balance sheet. Having said that, probably I think a part portion of your portfolio in terms of fresh investments should go towards banks, and probably I think a clutch of these banks, including HDFC Bank, ICICI Bank, Axis Bank, Yes Bank, is something that we're probably liking after the sharp correction that we witnessed. Will the numbers be soft in terms of how asset quality stroke growth stroke credit costs will pan out? Yes, I think over the next few quarters, including this, it might be. But over the larger part of FY17, our take is that the earnings growth should rebound in a very fast manner rather than a very gradual pace. So clearly, I think a clutch of these banks is what we'll prefer. But then allocation has to be around 15% in terms of fresh investments. You're not expected to be very, very aggressive with these markets related to how the volatility has panned out.
Fair enough. Let's move to the broader markets. Mayuresh, we've been flirting around with the 7,400 mark. We've first, gone below 7,600, 7,500, now 7,400. What kind of bottom are you seeing over here, or is it like a free fall which nobody can really ascertain?
As you rightly put it, I think nobody can really ascertain that many, and clearly I think it's a lot to do with how the international or the global data points are panning out. So clearly what happens with China, what happens with crude, whether crude slides down further from these current levels, all puts in the risk of global demand, global growth being probably subdued over the better part of FY16. Having said that, probably even our domestic internals in terms of our corporate earnings are expected to pan out, are not expected to see revival anytime soon. So everybody is expecting probably the first half of FY17 where earnings will start showing some amount of respite, together with capex probably specifically on the private side having recovered in that time period itself. So clearly I think we're working on a lot of data points both domestically and on a global scale, and again I think the most important trigger is the budget, which is a few weeks down the line. So clearly I think the volatility in the markets is here to stay. Whether you'll be investing aggressively, as I said earlier as well, I think you should be putting a part of your money through. It is very, very, very risky at this point of time to probably be very, very aggressive in these markets, because you're not really sure where the markets are heading at this point of time. But I think the softness in the markets would continue largely over the next few weeks.
You have the Asian markets bouncing off from the lows today, but our markets continue to be weak. What's the biggest concern right now? Is it the free fall in crude and what the repercussions are across the world? How are you reading? What are the top three concerns for the market right now, Mayuresh?
So as I pointed out, I think the fall in crude, which clearly puts into aspect the entire perspective on how global demand, global growth will pan out. B, in terms of the greater risk that one probably sees, I think if crude keeps on falling and stays at these levels, I think a lot of the crude producing nations which are probably dependent on their GDP, I think if there is a de-risk in terms of them going or they defaulting in that sense. And three, I think generally you're not really sure on how Chinese data points are going to pan out, which probably puts into effect a larger picture on how domestic demand supply might pan out in the near future and how commodities might price out in the near term. So clearly I think international factors is something that the markets are more worried about, specifically from an Indian context. And as I said, I think earnings and capex, I think is largely gestated in the markets that they are expected to remain soft over the next few months, to say the least.
So 23% fall in crude in just this last 1 month, and that just indicates why there is so much of nervousness and no cheer about crude coming down the way it has. But let's also cover some big news flow with Mayuresh, starting off of course with the big partnership that may trigger off a 4G war in the telecom space. Following the soft launch of Reliance's Reliance Jio, Reliance Communications has entered into a strategic partnership with Reliance Jio for covering the 4G LTE services. My colleague Nazia Iqbal is here with more details. Nazia.
Well, yes, absolutely. This is going to be a very important move in the telecom sector, where Reliance Jio and Reliance Communication are coming together, looking at the big 4G market that is coming about in the country. Now, this is going to be extremely important partnership, not just for these two partners, but also for the telecom industry, as it is going to be bring a huge impact on the whole 4G market. The all telecom operators like Bharti Airtel, Idea, Vodafone will have to see what really happens with this partnership, as it is going to be extremely important. Now, about the partnership, it is going to be partnership between the two companies in 17 circles out of the whole 22 circles, which is going to be extremely huge. Both the companies have extremely strong points on where they stand. Arcom has a huge amount of infrastructure in the telecom sector, and Reliance Jio, being a new telecom company, has huge presence in the 4G market, and it has huge connectivity in terms of connecting the whole of country through 4G network. So this is going to be coming together of two big forces in the 4G segment, and we'll have to see what changes it brings to the market that we're looking at right now, which is growing every single day. And now it is a biggest player. However, Airtel is going to be affected in a big way, considering that is the only player that has officially launched 4G services in a big way in the country right now. But other players also, like Idea and Vodafone, will have to see what happens on that. So it's going to be a big development in the telecom sector. But importantly, Arcom will have to wait for liberalizing their spectrum, which is still a permission that needs to be taken from the DOT soon.
Right. Nazia, thanks so much for that. Meanwhile, we have flashes on your screen on the December aviation market share statistics, and it shows that the SpiceJet has shown a month-on-month decline in market share, and that stock has taken a hit on the back of that. In fact, it was a stock that was weak after the substantial run-up that we saw in SpiceJet, but after this latest figure, it is down about 8.5%. We will be getting the management later on the show and getting you more on that, but let's go back to Mayuresh now. Mayuresh, Reliance Jio and Reliance Communication deal on details available. What's your take on these two stocks?
So clearly, I think this was probably known for the markets for the past few weeks. And clearly, I think it's a positive move over the longer time duration for both the players. But again, I think the recommendations from the regulator in terms of spectrum liberalization is something to be watched out for. And clearly, I think the kind of fees that Arcom might need to meet out over the 17-18 circles that it is expected to either trade or sell their spectrum, I think that is one thing to be watched out for. The other aspect maybe is their core business performance, which in our expectations is not going to see any significant improvement. And with the kind of spectrum payout that you're probably looking at capex stroke opex both increasing over the next few quarters, and that has been very evident with competitors trying to shore up both their data revenue part as well as their offerings as far as the 4G network is concerned prior to the official aggressive launch that Reliance Jio might bring into the market. So clearly, I think that overhang will still remain in their core business performance, and numbers are likely to be a driving factor for Arcom, which we don't see improving over the next 2 quarters. So largely maintaining a neutral stance on Arcom from the next 6 to 9 months perspective.
Okay, your take on SpiceJet, which is corrected sharply on the news that the month-on-month sales or market share is lower than expected. It's been the darling of the market, Mayuresh. Time for a bit of an adjustment on the downside?
Probably, and clearly if you see the financial performance of the last 2 quarters has been impressive, and there have been quite a few changes on the positive side in terms of both cost rationalization as well as improvement of market share. However, I think a month's data is not going to significantly change the tidings unless you get this persistently over the next few months and quarters. However, I think our take is that Indigo probably is best placed within the aviation space, market leadership position. The numbers in terms of profitability are panning out quite nicely. You're probably looking at a younger fleet size, which means that the operational costs compared to a Spice and a Jet is far lower for the company to manage. And clearly, I think the management focus is both on optimization and rewarding shareholders. Clearly, I think Indigo is something that we still believe that long-term investors should hold on to if they've got the stock in the IPO or at lower levels.
Fair enough. We also had Wipro coming out with numbers, and it has clocked a tepid third quarter in line with expectation. Dollar revenue and profits saw a flat growth, but the IT major has raised Q4 guidance. Rukmini is here. In fact, Rukmini caught up with the management on the quarter gone by and got them to talk about the outlook going forward. Listen in.
We've had a very grounded strategy which was forward-looking, and we will stay the course on our strategy. We will be cranking up our execution engine, and that will be my focus. And some of those things we've already started doing as in the past 9 months through delivery realignment and simplification that we've done. A higher focus on the emerging markets, which are now starting to deliver. So those will be some of the priorities that I will have.
If you look at our business, energy and utilities together, it's about 16% of our revenue. We are really overweighted on that segment. But there's one big thing that we believe in as far as Wipro is concerned. We think this is the time when we are going to go out there and win consolidation deals. And last quarter that way has been a very interesting quarter, because in one of our customers today, we own almost 85% of the technology share in that customer. We've taken everybody else out of that account, and it's one of the biggest companies in the world. So when this cycle comes back, we really believe that we are going to be extremely well positioned.
Mayuresh, now you have Infosys, TCS and Wipro out with numbers. Infosys and Wipro have been more forthcoming on the road ahead. What's your call on Wipro as a stock? Because the stock has not reacted at all to what the commentary has been.
No, clearly, Vinny, I think Wipro has been like the ignored stepchild of the IT industry. I think nobody is too gung-ho in terms of what expectations are clearly laid out. So I think it's a normalization process when they come out with their numbers, and they probably have met their guidance, and they've upped their guidance for Q4 in dollar terms to 2 to 4% in that range and band itself. Having said that, probably I think we as analysts would still be looking out for that turnaround to probably happen rather than Wipro just meeting their guidance. Infosys has probably outbeaten both TCS and Wipro in terms of what guidance they've probably laid out for the better part of FY16. So clearly in terms of stacking, I think valuations extremely supportive in terms of how Wipro is panning out at the current juncture. However, our top pick still remains to be Infosys, HCL Tech, and though I think we've got an accumulative rating on Wipro, I think we might just revise our estimates after hearing a detailed conversation of what the management had to say. So clearly I think it remains on our accumulative stroke buy list, but clearly I think Infosys, HCL Tech, TCS more or less preferred at this point of time within the top tier items.
A quick comment, Mayuresh, on the Asian Paints numbers, which are also expected. We are expecting a pretty good Q3. Also, of course, the input costs would have gone down because of oil prices coming down. What's your take on Asian Paints as a stock?
So clearly, I think the input costs will have a telling effect in terms of gross margins expanding for this quarter as well. But clearly, I think the two important aspects to be looked out or watched for is how the volume growth basically pans out. So the expectations are anywhere between 10 to 12%, and that's probably a broad range that the analysts are working out on the street. You're probably looking at revenue growth increasing significantly. And again, I think one really needs to understand from the management commentary in terms of how they're expecting the greater part of FY16 in terms of both repainting demand probably coming through and what expectations are probably getting laid out. in terms of their core business of decorative paints, which accounts for 80% of their overall revenues, to pan out for FY16 stroke FY17. So clearly, I think volume growth between 10 and 11%. You're expecting growth in the top line between 10 and 11%. And again, I think the bottom line growth should be quite reasonable as well. Again, I think valuations is something that the analysts will be watching out for, because it does trade at 36, 37 times. So any beat in terms of performance will be rewarded. Any miss, probably I think the stock might see some correction come through, because it's already trading at higher multiples.
Right. Last bit on Wockhardt. Mayuresh, we had the management clarify but not give any details today on that US FDA query on their plant in Chinde. What's your take on this? Because many of these pharma counters which had been darlings of the market have seen a sharp correction after the slew of US FDA queries or concerns raised. What's your call on Wockhardt and this space?
So that's really the unknown, and again, FDA has been pushing up pharma companies' compliances, and that's been very evident in terms of what is happening over the past few months and quarters. Having said that, probably I think the Shindra unit and the observations thereof, I think further clarity was obviously required, but I think it was not probably acquired at this point of time. So I think one will really need to wait and watch in terms of how critical these observations were, the reply that Wockhardt has given, and and in which manner I think the FDA responds over the next few weeks. So I think clearly that's going to be an overhang onto the stock. But clearly what we prefer at this point of time is Sun Pharma from the top tier names. Our belief is, again, I think the kind of concerns that have probably got laid out, both in terms of integration issues, FDA issues, are largely probably priced into the stock. The performance in terms of numbers for this quarter and next might be a little bit soft and muted. But again, I think our take is FY17 numbers will be far better for a company like Sun Pharma, which is a very qualitative franchise in our opinion.
Right, Mayuresh, we leave it there. Thanks so much for joining us with that. That's Mayuresh with the Stock Seed news and stocks that are moving in the markets today. We head into a short break, but up ahead we put the spotlight on the Q3 earnings of the small company Steel Strips Wheels. We'll also get you an exclusive with the SpiceJet management. That's coming up for you in just a minute.